What is up, guys? Welcome back to another video. Today we're going to be doing a little educational video, and I pretty much want to go over the main issue I see with most ICT traders. This is something that I struggled with and a lot of people I know struggle with, so we'll just jump straight into it. The first thing you guys need to realize if you're trading ICT is, I know a lot of you might be new or you've already been trading like ICT stuff for a minute. First thing, ICT, like people will start watching ICT content, all this stuff, and be like, bro, this is how the market moves. Like, I know some secret. No, you don't, dude. It's really been popularized like 2-3 years ago, or like in the last like 2 years. It's not some secret. That's the main thing before we get into anything else, right? The main issue I see with most ICT traders is they don't apply any logic. They just, you'll just look at, different confluences or different like, okay, fair value gap, order block, PD array, all this stuff, right? But there's no narrative behind any of this. What do I mean? Just logically thinking, the main thing you guys need to realize, the market, regardless of the way you look at it, is just simply going to be attracted to liquidity. That is the only thing. That is really the only concept, ICT concept, when it's really not an ICT concept. It's just like a concept in general, right? That is the only thing that you guys need to realize for any part of your strategy. Is the market is going to go where it's going to go. We're going to go, if we're going up, if the market is going up, why are we going up? We're going up to sweep liquidity, to take liquidity. There's higher targets, right? There's something to fill, there's orders to fill, right? That is simply basic logic. Now, in turn, it's like, okay, if you look at this, something like this on the hourly, we have this like wick. It's like, okay, going into the day, we start displacing towards it. We're going to hit that wick. The issue that I see with people is, well, not the issue that I see with people. The main issue with ICT traders that I've noticed is people will just scale down and just linger right here on the 1 minute, right? They sit on the 1 minute right off open, and then they just try to predict something because a 1 minute candle happened. It's like, okay, you have this idea. You have where price wants to go. It's like, okay, your buys for the day, let's go take these highs, right? And then off open, it's like, okay, you see, 2 candles on the 1 minute. It's like, boom, long. And you see like a bearish candle or a bearish fair value gap or an inverse or something. And it's like, okay, I'm going to short. You guys need to scale out of the 1 minute time frame before you even scale down. That's the main issue that I've noticed with pretty much every single ICT trader. That's the main issue I had as well. It's just sitting here, just lingering on the 1 minute, right? The 1 minute does not mean anything without higher time frame, right? The market's gonna go where it wants to go. If you look at the hourly, if you look at the 4 hour, it's gonna make sense exactly what we're doing. It's gonna make sense why we're reacting off of where we're reacting, why we're going where we're going. Like, everything is gonna make logical sense, right? If we just look at the, let me get rid of this. If you look at the hourly right here, it's like, okay, what are we doing? Boom. Hourly, we tap a gap and we go higher, right? I don't know why this, let me get rid of this. There we go. Okay. It makes logical sense, everything that's happening in the higher time frame. But then it's like, okay, if you scale down, you just look at the 1 minute. It's like, there's so many dumb trades that you can take. Look here, right? If you just sit here and linger on the 1 minute, okay, you see a bearish candle, you see a fair value gap. Ooh, I'm gonna short, right? And then you see, okay, boom, inverse right here. I'm gonna long now, right? You can get caught up right here so clearly, so clearly, and take a million trades, blow your account, everything. Why? Because you don't think logically and look on the higher time frame. If you look right here, right? If you scale out 15, right? Look at hourly. Most likely, what's gonna happen? We're gonna draw towards this big gap right here. So if that's an idea that you have, right, on the hourly time frame, and on the 1 minute you just scale down, and it's like, okay, you're trying to catch this short-term flip, right? You are just simply taking the lowest probability trade, right? That's the biggest issue I see with people, is they'll stick on the 1 minute, where it's like, if you look at the higher time frames, exactly what happens is very clear. If you look at your 15, right? If you look at your, okay, that was a 5. Look at your 15, right? You look at your hourly. It makes perfect sense why we're doing what we're doing. But the issue with you guys is you get caught up in the 1 minute time frame, and you get faked out. You see a candle, you enter, right? You see an inverse, you enter. You see all these like different confluences and you enter, but you don't have any higher time frame knowledge. Okay, yes, your 1 minute is good for entries. Your 1 minute is good to actually execute your trade. But besides that, like the 1 minute, like a couple 1 minute candles, a 1 minute market structure shift, a 1 minute inverse, a 1 minute fair value gap is not going to reverse where price is going, right? Any given day, it's like, okay, we want to hit these highs on the hourly. We're not going to reverse off a 1 minute confluence. We're going to hit these highs, right? If the target is lower, okay, we're going to hit this target. We're not going to reverse off of a 1 minute confluence, right? Okay, boom, the target is now higher. What do? We go take this target up here, boom, right? But then, same thing I mentioned, it's like when you scale down, you can just end up taking a bunch of stupid trades right here in the 1 minute. You get faked out, you rush into a trade, all this stuff, ultimately without any higher time frame conviction. That's the main thing. And it's honestly very, very simple, but it's applying logic. That's the main issue I see with you guys, is you don't apply logic. You don't think logically. You watch some videos, right? You learn about some confluences, and you go in and you look for a pattern, right? You go in and you look for a pattern. And ultimately, like, you're just not going to see success. You're going to end up taking stupid trades. You're going to wonder why you're taking these trades. You're going to wonder why you're losing these trades. The answer is right there in front of you. You guys just scale out, right? I think that about 90% of you, maybe, I don't know, I kind of pulled that out of my ass. I think a decent amount of you guys would genuinely benefit from not even going down to the 1 minute. Looking at your 5, 15, and hourly and just seeing where price is going to logically go, because it's very clear on the hourly time frame exactly which highs we're going to take, right? Where we're trending. If you just look at the overall trend, right? There's a reason people say trend is your friend, right? If we're trending higher and there's highs to be taken, we're probably going to end up sweeping those highs, right? That's probably exactly what's going to happen. But when you scale down, it's like, okay, you might scale down here. I know this is hourly, but you might scale down, see that we took this high, right? We get a little bit of a rejection off it, right? Boom, I'm gonna short now. You're getting caught up in the 1 minute here. That's the definition of not having any, higher time frame narrative, because what you can see what happens, right, on the higher time frames, it's very evident what we do. Okay, boom, look what happens. Bam, we go to the next high, right? Boom, there you go, right? But when you're scaled down on these lower time frames, you just might not know. You might try to catch a reversal. You might try to do all this stuff based off of a 1 minute confluence. That's ultimately not going to play out. So I know I kind of yapped all over the place, but genuinely, if you guys stop focusing on the smaller picture and focus on the larger picture, you're going to be a lot more successful trading ICT, because ultimately, again, ICT is not some secret. The reason why you should be trading the way you do is because it makes sense to you. That's all trading is. You can't trade something that doesn't make sense to you, right? For me, it makes sense to me. It's like, okay, if the market is trending up and there is higher targets to target to, buy side liquidity, which we know can be a target, and the market is trending up, we're displacing up, we're moving up, we're probably going to hit that target. That makes logical sense to me, right? That's when you can obviously start applying your other confluences, but it's all based off of the higher time frame and just applying some sort of logic. It's really that simple. You can be profitable trading any strategy. I'm sure most of you guys have realized this by now, or if you haven't, you're just simply coping, right? So if you're going to trade something like ICT, which is in turn a lot more complicated than trading, bull flags and trend lines, right? At least trade it with logic. Don't just try to add a million confluences, try to catch some crazy trade with, again, a million annotations on your chart. The market is not going to listen to your annotations. It's going to go where it wants to go. That's why, okay, just apply some logic, stick to that logic, and I promise you, you'll be 100 times better of a trader than you are right now. So hope you guys, gain some value from this. If you have any more questions, just leave in the comments below. I'll try my best to answer them. If you guys want more, videos of some sort, just let me know. But I will catch you guys in the next one.